Brent is up on the session, and everybody thinks the bottom is in. They're wrong. This is a liquidity grab before the collapse. The trap is set. While you were sleeping, Brent painted the most dangerous bounce of the week, and right now, the price is hanging exactly where the algorithm stops will be gunned. $72.17, up a tiny 0.08%, but sitting above every short-term resistance level on the sheet. That is not bullish. That is a bull trap in a structural downtrend. I'm going to walk you through one danger zone and one hidden opportunity, and I'll show you both before the first red candle closes. There's one number you need to memorize today, 71.47. Write it down. That is the floor that, once broken, opens the trapdoor to $68. I've got two scalp plays, one short snipe, one liquidity grab, and one session swing that aligns with the weekly strong sell. Stay all the way to the end, because if you miss the invalidation level, you'll be on the wrong side of the next $4 collapse. On screen right now, you're seeing the core message, Brent $71.47 trap, 2 scalps plus 1 swing. That's your blueprint. Let's get an instant market verdict. Brent's daily trend is a strong sell. Weekly is a strong sell. Monthly is a sell. The higher time frames are crushing this market, driven by OPEC Plus raising output targets and Hormuz traffic normalizing. The narrative is simple: more barrels, less fear premium, and a demand curve that is flattening. Yet, on the 1-hour chart, the trend is a strong buy, and on the 5-hour it's a buy. That tiny bounce from deeply oversold conditions, RSI 14 at 30.12, stochastic at 22, Williams %R at -83, has lured the herd into thinking this is the reversal. It is not. It is a mean reversion in a bear trend, and I am treating this entire structure as a sell on strength until proven otherwise. The session bias is fading the rally. The single invalidation level that flips my bias from bearish to neutral is a daily close above the MA20, which sits way up at 77.99. That is miles away. Intraday, if we break and hold above 72.30, just above today's a 3, with volume, I'll step aside from shorts. But until then, my conviction is absolute. Rallies are to be shorted. Write that number down, 72.30. If price closes on the 1-hour above that, the entire structure resets and we could squeeze to 73.57, the MA10. But right now, the herd is positioned exactly wrong. Retail is buying the oversold bounce, and the commercials are adding to short hedges. Guess who gets paid? The next signal changes everything. Now let's dissect the chart from the top down, and I'll give you the hidden divergence that nobody is talking about. On the weekly, Brent is buried below every major moving average. MA20 at 77.99, MA50 way up at 86.04, and the 200-week is above $82. Price is trading at a massive discount to all of them. The monthly trend is a sell, and the ADX on the daily is 59.4. Anything above 25 signals a strong trend, but 59 is a freight train. That tells you the trend strength is enormous, and it is to the downside. The daily MACD is deeply negative at -6.18, and while the histogram might be trying to curl, there is no bullish crossover. The divergence that matters is the one between this oversold bounce and the momentum reading. The CCI is still -75, which is improving, but it's coming from a deep hole. The bear flag is building. On the 4-hour, price just tagged 72.17, and if you look at the daily pivot at 71.69, we are now above it, but the true resistance is the cluster between 71.81, 72.03, and 72.15. All three are 1, are 2, are 3 levels. Guess what just got breached? Yes, a 3 at 72.15 gave way by a couple of cents, and that's exactly the stop-hunt zone that traps breakout buyers. The real supply sits just above at 72.30, which is the prior swing low from 3 days ago and the next intraday resistance. Support, on the other hand, is the trio you must tattoo on your screen: S171.47, S271.35, S371.13. ATR is 2.44, so daily ranges are wide. The 60-minute chart is showing a strong buy, but the moving averages on that time frame are flat. This is a momentum divergence from the higher time frame trend. Here's what most traders miss. When you have a strong sell daily, an oversold bounce that retests broken support turned resistance is the highest probability short entry you can take. And that's exactly where we are now. The bounce is mature, the resistance is testable, and the re-entry for the daily downtrend is imminent. The 71.47 level is the line in the sand, a break below that confirms the trap was sprung, and the move accelerates towards the weekly S2 near 68. Let me now marry that technical picture with the fundamental driver, because the cross-linkage is screaming one word: structural. Over the last 24 hours, the core news couldn't be clearer. Oil prices slipped as OPEC Plus raised output targets, and Hormuz traffic remains resilient. That second part is the geopolitical heartbeat of Brent. The Strait of Hormuz has been a constant risk premium for years, and the moment those flows normalize, the fear bid evaporates. Analysts are now calling the downtrend structural, and I agree. You are witnessing a supply shock in real time, not from a disruption, but from an addition. More barrels from the cartel, while demand forecasts from China and Europe get revised lower. The linkage to equities is also crucial. S&P 500 holding up does not mean oil follows. In fact, a resilient stock market keeps the Fed on hold, the dollar strong, and that is another headwind for dollar-denominated crude. The dollar is challenging 105, and if it breaks, Brent feels another wave of selling. My 1 to 2 week directional lean is firmly to the downside, targeting 71st and then 68.50. The exact invalidation event is a weekly close above 77.99. If that happens, I'll eat my words. But until then, the path of least resistance is lower. Do you think Brent breaks $68 this month? Comment yes or no. I'm tracking the consensus and I'll pin the best reasoning. Most people skip this next section. That's exactly where the money is made. Keep watching. I'm now going to give you 3 precise trade plans, each with exact triggers, stops, and targets. We start with scalping, then finish with the swing that can run for days. Trade setup number 1, the opening scalp. This is a high-probability short scalp designed for the New York session open or the London afternoon, taking advantage of the resistance wall. Price is currently at 72.17, right above a 3. Wait for a 5-minute bearish engulfing candle or a shooting star rejection exactly at the 72.15 to 72.20 zone. Your trigger. Price taps 72.18, then prints a clear bearish engulfing that closes below 72.10. Get short immediately with a stop loss at 72.33. That's just above the 72.30 invalidation and the next liquidity cluster. Your take profit 1 is 71.82. Just above a 1, banking a quick 35 cents. Take profit 2 sits at 71.69, the daily pivot, for a total of nearly 50 cents. That's a risk to reward of 1 to 2.2 on the first target. If the 5-minute candle closes back above 72.30, the trade is instantly void. Do not hold and hope. The opening SCLP entry, 72.18, 5M bearish engulfing after the tap, stop loss. 72.33 take profit 1, 71.82 take profit 2, 71.69 risk, reward, 1:2.2R, to TP1, invalidation, void if 5M candle closes above 72.30 trade setup number 2, the liquidity grab. This is the counternoise scalp that preys on the stop hunt. The smart play is to let the market run its course. If Brent spikes up to 72.45 to 72.55, that's the classic liquidity grab above the pre-session high. Don't short the first spike. Wait for the 15-minute candle to close back below 72.30. That's the snapback confirmation. Enter short at 72.29 on the next candle open, with a stop loss at 72.68, just above the fake-out wick. Your sell target is the nearest intraday liquidity pool, 71.47, the S1 support. That's an 80-cent move, roughly a 1 to 2 risk-reward ratio. This scalp requires fast execution and a willingness to sit through noise. If the 15-minute candle does not close back below 72.30 within 2 bars, the setup is dead. The liquidity GRAB entry, 72.29, 15M close back below 72.30 after spike, stop loss, 72.68 take profit 1, 71.47 risk, reward, 1:2.0 R invalidation, void if 15M fails to reclaim below 72.30 within 2 candles, and now the big one. I need you to focus. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. This is the session swing that aligns with the 4-hour and daily strong sell trade setup number 3, the session swing. This trade is based on trend alignment, not noise. We are selling into strength, and the trigger condition is a 4-hour candle close below the daily pivot at 71.69. That confirms the rejection from the resistance cluster and the resumption of the downtrend. Entry is at 71.68 on the next 4-hour candle open. The stop loss goes above the daily structure. Place it at 72.55, which is above the anticipated liquidity grab zone and gives the trade breathing room. Conservative take profit 1 is 70.20, a level that coincides with prior swing lows. The stretch target is 68.50, the weekly S2 and a psychological magnet. That's a potential 300-cent reward on a risk of 87 cents, a 1 to 3.4 risk reward. The trailing stop rule is critical. Once price touches 70.90, move your stop to entry. This locks in a risk-free trade while letting the trend run. The invalidation for the swing entirely is a daily close above 77.99, but you don't need to wait for that disaster. A 4-hour closeback above 72.30 tells you the bounce is life, and you should tighten stops or exit. The session SWNG entry, 71.68, for H close below 71.69, stop loss, 72.55 take profit 1, 70.20 take profit 2, 68.50 risk and reward, 1:3.4 R to TP2, trailing stop, move stop to entry at 70.90 invalidation, void if 4H close above 72.30 risk management pulse. 30 seconds of the most important rule in your trading career. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk because the noise can stop you out before the move. No positions through high-impact news events like weekly EIA inventory or OPEC headlines. Stops are non-negotiable. They are your protection against the black swan when Hormuz suddenly flares. This is how you survive to trade the next big move. Now let's wrap with the single most critical level for the next session and set the retention loop. If today's candle closes below 71.47, the entire monthly trend enters acceleration mode. That's the level that separates winners from losers. Tomorrow's wildcard is the US dollar and any fresh OPEC commentary, but the real cliffhanger is the $70 psychological magnet. If that breaks, the whole structure flips, and I'll have the updated blueprint for you 24 hours from now. If you want the full breakdown on Bitcoin's divergence from equities and the gold gamma pin, that video is live now. Tap the end screen right after this. Then hit the bell so tomorrow's alert lands before the London Open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.